August 1st is the new tariff deadline for 150 countries, and now things are getting more tense. President Trump has been ramping up his threats on increasing tariffs on countries around the world to try to get a deal before the August 1st deadline. And if a deal is not reached before August 1, tariffs are going up, and that could push markets down. Now, for full transparency, the original tariff deadline was July 9th, but it got postponed, and now the White House is saying that August 1 is a firm deadline and it's not going to be pushed again. Now, my team and I have been analyzing the trade negotiations that are going on, and I'm going to break it down for you in this video. But the reason why you want to pay attention to this video is because these potential tariffs could impact the stock market depending on what happens. It could impact inflation depending on what happens, and it can impact the tax revenue the United States government is getting from those tariffs. Now, anybody who's been investing their money in 2025 understands the impact of these tariffs on the stock market, because we have seen 3 stock market crashes in 2025, all because of the tariffs and tariffs potentially coming. The first crash was back in February when President Trump first announced tariffs on Canada, China, and Mexico. The second crash was in March when President Trump reinstated those same tariffs on Canada, China, and Mexico. And the third and the largest crash was in April when President Trump launched Liberation Day, where he announced tariffs on more than 100 countries around the world. Now, interestingly, a common thread with each one of these stock market crashes is that some people lost a lot of money and some people got rich, because today, at the time of me recording this video, the stock market is near record highs despite these 3 market crashes. And now the question on every investor's mind is what's going to come next in the stock market, and the best way to analyze that is just to take a look at the 5 largest trading partners with the United States, which are Mexico, Canada, China, Germany, and Japan, and understanding where are we in the trade deals with each one of these and what could potentially happen if that trade deal does not happen by August 1st. So let's break this down one by one, and I want to remind you that if you're an investor and you want to know how to navigate this type of economy and find investment opportunities before they hit the big mainstream, I'm hosting a free live workshop on August 12th. It's my biggest investment workshop of the year, where I'm going to be going over exactly that, how you can navigate your investments through this crazy economy. It's a completely free workshop. I'm doing it twice on August 12th, once in the morning at 10:30 a.m. Eastern Time, again in the evening at 8 p.m. Eastern Time. If you want to join, you do have to register. We have hit capacity every single time. This is my biggest workshop of the year. So if you want to join for free, all you have to do is click the link down in the description below. So let's start with Mexico. President Trump has threatened a 30% tariff on Mexico starting August 1 if no deal is reached. Again, that would be an escalation from the 25% tariffs put on Mexico back in March. There are 2 big things that President Trump is asking for from Mexico. Number 1 is he wants Mexico to put more money to stopping the fentanyl crisis, meaning fentanyl crossing the Mexican border into the United States. And number 2, he wants Mexico to put more money onto the border to prevent people from hopping over the border illegally. What Mexico is asking for, besides no tariffs, is a lower tariff on steel and lower tariffs on produce coming from Mexico into the United States. And Mexico wants both countries to be involved on the border security, and that it shouldn't lie so much on Mexico. Number 2, with Canada, President Trump has threatened a 35% tariff on Canada if a deal is not reached by August 1. The big things that President Trump is asking from Canada is, number 1, help stop this fentanyl crisis and help put more money into border security so people are not illegally entering the United States. Number 2, he wants Canada to buy more United States dairy from farmers in the United States. And number 3, he wants Canada not to tax United States goods. Canada's biggest demands are asking for a removal of tariffs, especially on things like aluminum, on things like steel, and things like cars that are manufactured in Canada and then brought into the United States. China is an interesting one, because right now we have a 90-day truce which expires on August 12th unless we have a full deal before August 12th. What President Trump is demanding from China is, number 1, China should lower tariffs on goods coming into China from the United States. Number 2, the United States should have more access to rare earth minerals from China. And number 3, the United States should be able to protect what technology is going into China and how that technology is being used once it's in China. China is demanding obviously lower tariffs. They want the United States to buy more stuff from China, and China wants access to more industries in the United States, including things like medicine, energy, and food. Germany doesn't act as an individual country, they're acting as part of the European Union, the EU, and right now President Trump has threatened a 30% tariff on EU if a deal is not reached by August 1. What President Trump wants from the EU is, number one, he wants to raise tariffs on auto vehicles, including those fancy German cars, when they come into the United States. And then number two, President Trump is demanding that the European countries buy more energy from the United States companies. The EU in response is asking for essentially no tariffs. They don't want tariffs on EU imports going into the United States, and they want a 0 for 0 tariff on vehicles, meaning EU is saying, hey, we're not going to tax the cars coming from the United States into the EU if you do not tax the cars going into the United States from the EU. And last but not least is Japan, where President Trump has threatened a 25% tariff if a deal is not reached by August 1. What President Trump is demanding is, number one, Japan should be buying more stuff from the United States because we have this big trade deficit, so he wants Japan to spend more money in the US buying things like rice. And number two, he wants the United States to have more influence and power in investing money into Japan. Japan is asking for a rollback on tariffs, specifically on the auto tariffs, because Japan has those big car companies and they want those car companies to be able to sell their cars into the United States without a 25% tariff. And Japan is asking for protection on agriculture products, where Japan wants to be able to protect their own farmers and not have to buy things like rice from the United States. Again, a lot of things can change between today and August 1, but these are the things that you want to pay attention to because investors have their eye on this. And if tariffs come in hotter than expected, you can expect markets to be more volatile. If tariffs come in less than expected, well, that could help markets rise. But this is where we want to also talk about how could these potential tariffs impact inflation, because there's been a lot of talk about this. Earlier in this video, I told you how the Federal Reserve Bank thinks that inflation from tariffs is coming later on in 2025, while the White House says that there's going to be no tariffs from inflation. Let me show you how these tariffs work. That way you can come to your own conclusion. If I'm a company in the United States and I produce products from China, so let's say I produce a t-shirt in China and it costs me $10 to bring that t-shirt into China, and then I sell it in the United States in my store for $20. If there is a 10% tariff on the goods from China, that means now I'm not going to be able to buy that shirt for $10. I'm going to have to pay an additional $1 tax, which means my total cost is no longer $10. It's now $11. And now as the business, I have a few things that I could do. Option number one is I continue selling my goods for $20 and now I'm making a smaller profit margin. Option number two is I nominally raise the price of my goods, meaning I raise it from $20 now to $21, kind of like a tariff surcharge. Or option number three is now that my costs have gone up by 10%, I'm going to increase my prices by 10%, which means now I'm going to raise the prices of the shirt to $22. What's going to happen? Only time will tell. We've seen a big variety of things happen already. For example, Walmart says that they're going to have to raise their prices because of tariffs and their small margins, while Home Depot said that they're going to try not to raise the prices of their stuff, but if tariffs are impacting the prices of things, they might just stop selling it. Now, the reason why this is harder to predict is because there's a lot of company discretion here. Some companies could say, instead of buying things from, say, China, where tariffs are high, we could buy products from a different country. Other companies could say, you know what, instead of selling these shirts, maybe we start selling pants which don't have tariffs. Or companies could have different financial policies where certain companies are going to absorb the cost, others are going to raise the cost as much as possible, depending on what supply and demand is. So there's a lot of variables here, which is why time will tell. But you also want to pay attention to how these tariffs can impact our tax revenue here in the United States. The White House is predicting to generate around $300 billion worth of tariff revenue in the United States in 2025. We can compare that to 2024, when the United States generated about $69 billion in tariff revenue. Now, why does this matter? Because we're seeing a lot of changes in how the United States government is going to be generating taxes. What do I mean? President Trump signed the One Big Beautiful Bill Act very recently, which is going to change how much you're going to be paying in taxes. And according to the Tax Foundation, the United States government is expected to lose somewhere between $400 to $500 billion in tax revenue in 2025. Now, Some of this is going to be offset by tariff income, but it looks like there's going to be a differential between how much money we're losing in taxes versus how much money we're gaining in tariffs. But some economists are predicting that we're going to generate more tariff revenue in the future, but this is where time will tell. But the reason why this matters and why you want to pay attention is because this can impact your future taxes, and this can impact how our tax dollars are being used, because if the government is generating less tax dollars, but we still have high expenses, that means that the government would need more debt. If we need more debt, that means more tax dollars could have to be used to pay back that debt plus interest, which means less dollars to pay for things like infrastructure and other benefits for people in the United States. So this is something you want to pay attention to. A lot of these are just estimates, but over the next 12 to 24 months, this is going to be important because it can impact our national debt, it can impact tax levels, it can impact inflation, it can impact treasury yields, and a lot of other things that make up our economy. So this is something you want to keep your eye on. Again, for those of you that are investors and you want to find the investment opportunities through the changing economy that we have right now, you can join me on my workshop on August 12th. I have that link for you down in the description. President Trump signed the One Big Beautiful Bill Act into law. This big bill will bring some big changes to our economy, starting with some big tax breaks to big funding for certain things like more deportations. And the reason why you want to pay attention to this bill is because it goes into effect retroactively. It goes into effect January 1, 2025.